Hello, good afternoon. My name is Małgorzata Kurzępa. I'm a founder and director of Fairhouse Investments, the company which invests in properties in UK for over 7 years and 10 years altogether. Every Sunday afternoon around 1 p.m., I'm coming to you with a video about investing in properties. I'm talking about different subjects, and today I want to tell you a little bit about taxation. So, if you like my videos or you find it interesting, please give me a thumb up. If you think any of your friends or relatives could be interested, please share this video with them. And I also want to invite you to my newly launched YouTube channel, which is called Fairhouse Investments. And on YouTube, you will find all videos I've already uploaded to Facebook before. So if you are looking for anything particular, you can go to YouTube and maybe you will find it there. There are the subjects are entitled, so you definitely, if you're looking for something particular, it's probably there. If not, it would be soon. So now coming to the taxation, the main important tax is an income tax. It's not only important for investors, of course, everybody's paying income tax, and this is the base of this tax is our income, which means for investors, the income we have from other sources plus income from properties. So if you earn below £12,500 per year, then you don't have to pay a tax. This is tax-free quote amount. Then if you earn up to £50,000 per year, then you do 20% of tax. And if you earn over £50,000, then you have to pay 40% of tax. There are also other groups, but they are completely irrelevant in this case. So there is a comparatively new law about taxation, which is called Section 24. It started being introduced in 2017, and now it's fully introduced from 2020. Which means that before, when you take your income, your gross income from properties, you could reduce it by your expenses. Now this rule has changed. The main change is that before you can claim as an expense the interest of your mortgage, which is not allowed to claim anymore. Also, some other expenses has changed. So if you want to know exactly what has been changed, you have to go to gov.uk website or other website about taxation to change to double check what has changed, or talk to your accountant, please. But the idea is that before you can reduce your income, while now it's not possible. It's extremely important for people who own the properties under their private name, under LLP or under trust. It doesn't consider the people who own their properties under LTDs. So for people who are higher taxpayers and they own their properties under their own name, it means that their income basically increase the base of their income, so they have to pay higher tax. And also for some people who used to be lower taxpayers, now because they have higher income from properties, because it hasn't been reduced, then now they could be higher taxpayers. It also influences things like child benefits, child tax credit, and student loan repayments. So this is quite a change for most of the people, as I said, who own their properties under their private name, which is still a case in, which is very popular situation in UK. When I was looking for this, when I was doing my research about the subject, I found the data that around 100,000 private landlords left the market. Actually, they get rid of their properties because they decided that they don't want to be landlords anymore. But we have to be aware that every year or every couple months, something new is appearing in taxation, and we have to be aware, we have to keep an eye on it, and we just can't change it. We just have to adjust to it. But this is their choice. If someone doesn't want to be a landlord, of course, it's not mandatory. Another very important taxation is a capital gain tax. And this is due when you sell your property. So as long as you keep your property, you're fine. It's not about you. You don't have to pay anything and you're fine. But in a situation when you decided to sell, in my opinion, you should strongly consider it, because sometimes it's better to remortgage the property rather than sell. So as long as we cannot avoid the tax, because of course when you sell, you have to pay this tax, capital gain tax. But if you only need more money, then you could consider a remortgage. And how does it look like? Let's say you bought your property 15 years ago, you paid £100,000 for it. Now it's worth £200,000. So if you are a higher taxpayer, then you will pay 28% of capital gain tax, which from 100,000 would be 28%, and for lower taxpayers it would be 18%, so 18,000. Why from £100,000? Because the base of the taxation is the difference between the current value of the property and the price you paid for it some time ago. So in this case, you bought for 100,000, now you're selling for 200,000. The difference is £100,000. So this is the base of taxation. You could reduce it a little bit if you improved your property. For example, you build extension, you build a loft, but not if you only refurbish the property. So in this case, to make it easy for our counting, let's say the difference in price is £100,000. So you higher taxpayer, you due 28%, £28,000. You lower taxpayer, you have to pay £18,000 of tax. If you sell your property, you have also some extra expenses. You have to pay the agent who's selling your property. Probably you lost your income from tenants because they left the property when they realize you want to sell. You have to pay the expenses, so you have to pay council tax, electricity and other water, things like this. So let's say if you started selling your property and you sold it after 3 months, your extra loss is about £6,000-7,000 plus the money, including the money for the real estate agent. So the money you get from the buyer, £200,000, minus expenses, £7,000, minus taxation. If you are a higher taxpayer, you only get £175,000 to your account. When you're lower taxpayer, you get £165,000 into your account. Sorry, the other way around. When you higher taxpayer, you get less, 165. When you lower taxpayer, you get £175,000. Sorry, I made all my notes and eventually I didn't make it right. But if you decide to remortgage your property and you apply for buy-to-let mortgage, which usually gives you 75% of the value of the property, then you will have £150,000 on your account. Of course, there are some minor expenses like the broker fee, the solicitor fee, but let's say it would be altogether £1,000. So at the end, you have £150,000 on your account, but you keep the property. Of course, your expenses now are higher because you have to pay the mortgage, but still you have a passive income from the property. While if you sell it, the best scenario is you have £175,000. The worst scenario is you only keep £165,000. So I hope I didn't mix up the numbers this time. If you have any more questions, you can give me a shout. You can send me a text message under my video, or you can ask additional questions. But the idea is that you can avoid this tax by simple keeping the property. Avoid is not a good word. I don't know how should I say that. You just don't pay it. Just don't sell, don't pay. Of course, there are it's not always that funny. Of course, there are some situations when you just have to sell the property. For example, you want to get out of the market, you don't want to be a landlord anymore, or for example, the property needs a serious refurbishment and you can't afford it, so you're just trying to get rid of it. Of course, there are some situations when you have to sell and then you pay the tax. But what I'm saying is that it's basically what you can do to keep as much money as you can, instead of giving it away, you know. So these are two most important taxes, and the third, actually, it's not that important for us, because what I want to tell you now is about the inheritance tax. So it's not about us, it's more about the people who inherit our estate. So in the same way as you remortgage your property, you could reduce the value of your estate by remortgaging it. So for example, if you own your property without mortgage, and you want to reduce the value for your the people who inherited it later. Usually inheritance tax is 40%, and there is a free quotation, which is 325,000 pounds now. In some cases, it's 500,000 pounds. So, and you have to pay this tax in 6 months from the moment when the person passed away. So if you inherit the property which is worth 400,000 pounds, for example, you know, in South England it's not that rare, the taxation would be 40% from 75,000 pounds, because from the difference. So you will have to pay 30,000 pounds. So if you inherit the property which belong to your husband or wife, or when you inherit the part of the property which belong to your husband or wife, then you don't have to pay this tax. So let's say in a situation when there is a, let's say, quite senior couple, and the husband passed away, the wife inherit his part, and she doesn't have to pay the inheritance tax. But in the case when she also passed away and their son is about to inherit the property, he accumulate the free quotation, which means he accumulate his mom 325,000 plus his own 325,000, which means that as long as property is not worth more than 650,000 pounds, he doesn't have to pay the inheritance tax. But if it's worth more than that, you can reduce the value of the estate up to 650,000. And how to do it? You could remortgage it. So the older couple, when they're still living, or the wife, when she become a widow, she could take a mortgage, a normal residential mortgage without anything complicated. Not for of course, not for 90% of the property, only as much as she needs. For example, you know, what's the point to live in a big property if you cannot afford to renovate the bathroom? So in this case, why to keep the estate in one piece and do not have the money for everyday spending, or everyday's life, or things you really need or you can enjoy? Or she needs a lift, for example, for the stairs, because the property is not a bungalow, it's a 1 or 2 story house, and she needs an elevator to use it comfortably. So she could remortgage the property and use this money for things she really needs for now, you know. And in this case, the entire value of the estate would be reduced, and in this case, she could help her son or whoever inherit the property in the future. I don't know if it's right or not, if we leave the property to our kids, if we really should do some extra things for them in this case. But I think I realized how many older people struggle with their everyday expenses, while they are not aware that they have a big asset, which is their own house, and they could release some cash from their own estate to have a comfortable life, you know. It's nothing wrong about it. So this is basically everything I wanted to tell you. Let me double check. Yeah, I think I told you about everything. So as I said, you will find all my videos here on Fair House Investments Facebook fan page, but also all videos have been uploaded to my YouTube channel, Fair House Investments. So if you find it interesting, please give me a thumb up. If you think any of your friends could like it or find it interesting, please share it with them or go to my YouTube channel. Thank you very much. I wish you a wonderful Sunday afternoon. Małgorzata Kurzępa, Fair House Investments. Bye.